Being wrong on a trade idea is really not a big deal. In this video, I will teach you why that is. Let's talk about probabilities in trading, why this is crucial if you want to be successful in trading, how you can easily fall into your own trap, and what you can do to obtain the right mindset that will pave the road to making consistent profits in trading. Trading can obviously be a very profitable profession. Let's be honest, nearly everybody who's dipping their toes in the markets for the first time is dreaming of the profits they will generate. Because in the end, let's be honest, we're all in it for the tech. Living the life we want, total freedom. When attempting to become a professional trader, it can be challenging to leave your day job and all securities behind. Because you know that trading might be risky as you will be putting actual money on the line in order to make a profit. So you make the choice to attempt trading and be responsible with your funds. Even though you might be attempting to be responsible, you will likely lose at first as you lack the right mindset and skill set that is required to become a successful trader. There are many reasons why you seemingly make the wrong calls. One that stands out has to do with mindset. You may have heard, read, and even convinced yourself of the fact that trading can be risky. This risk-taking appetite can actually quickly lead to self-sabotaging. As a matter of fact, in your attempt to be responsible with your funds, you might fall into a thinking pattern to look for certainties. If that becomes a dominant force in your trading habits, you're doing it wrong. Have you ever experienced frustration while taking a losing trade? Or were you ever in the situation of closing out your trade early on for a small profits, only to find out it was indeed the right call, and then price moves in your direction as you planned, yet here you are sitting on the sidelines and missing out on the move? Then this is the video for you. So save it in your favorites, like it, subscribe to the channel, as this channel ultimately is the voice of reason in your journey to become a trader. So let's take a look at a hard, cold and fundamental truth. Trading is simply the endeavor of generating profits by risking your own funds. This means you need to realize two really important things. In order to make money, you must risk money. Without risk, there will be no reward. And trading is a game of probabilities. A natural reaction might be looking for certainties in the market, because once in a trade, it's really easy to start looking at other ideas, look at news articles and read about what other people say about a certain asset that you might be trading. Stop thinking in certainties and finding validations elsewhere to help you convince you made the right decision. This can be a very tiresome effort and often is simply just not worth it. Simply accept the fact that nothing is certain in trading. Anything can happen at any moment, at any time. For that reason, it's pretty much impossible to know for sure whether your trade will be a winning or a losing trade. Time would be much better spent in thinking in probabilities rather than in certainties. To give a very simple example, if price is coming up to a resistance level, the probability of that resistance being breached is actually low. However, if it does go through and holds, the probabilities increase for higher prices. So what I'm really saying is simply have your plan ready. Know where you want in, where you want out, what are the levels that provide support levels and resistance levels. Then trust in your setup and let the market validate or invalidate the setup and simply stick with it. What is also really important to realize is simply accepting the fact that you can lose. If you learn how to think in probabilities, it's much easier to accept the fact that there is a chance that you might lose the trade, even if it's small, depending on your probabilities of the trade. Therefore, it can always be expected that there is a chance that you lose money. By simply knowing beforehand how much of your funds you're willing to risk and accept that you might actually lose it, means you're accepting the nature of the market. The market does whatever it wants and when it wants. And as simple as that, losing trades are part of trading, as a win rate of 100% over an extended period of time is simply impossible. By knowing the risk beforehand, you compensate for the insecurities that the market come with. The trick is to keep those losses small and seek for good opportunities so that your winners can be big and make up for your losses. It is really not about being right. Losing a trade means that you were wrong on your idea. The problem is that this leads quickly to embarrassment, frustration, or anxiety. What if I would tell you that a good trader can be wrong on a trade idea and still be profitable? Trading is really not about being right or making you feel good about yourself. You are here to make money, not to prove yourself in front of others. Therefore, if you can set your ego aside and accept that you are wrong, you can correct your mistake and adapt to the new data that the market presents to you. And if you handle the situation correctly, you can still be making money, even if you are wrong. As a matter of fact, the sooner you accept you can be wrong, the sooner you might be able to cut your losses and move on to the next trading idea. It allows you to get out for a small loss and actually make profits on the next trade. If you manage to make the shift to thinking in probabilities, there's a good chance your trading results will improve drastically, and it can give you the confidence you need to stop feeling emotional about your trades and simply trust in the process. If this video was of any help, let me know in the comments below. If you want to learn more about trading, then check out this little gem next.